Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Tuesday, May 19, 2009. We begin in the UK where the consumer price index fell to an annual rate of 2.3% in April, cooling from a 2.9% pace in March. That figure was slightly below forecast and is the weakest inflation in 15 months. The slowdown in inflation should not come as a surprise, as Bank of England Governor Mervyn King predicted as much when the central bank came out with its quarterly inflation report last week. Inflation is expected to reach a pace of only 0.5% in the third quarter, as the weak economy limits how much stores and companies can raise their prices. The pound-dollar pair, which surged to start the week, continued its rally in today's trading, climbing 200 pips from its low near 1.53 to a high of 1.5515. Stocks in London climbed during the middle of the European session, which helped fuel risk appetite in the pair. However, following the CPI release, the pound pair stalled and then traded sideways the rest of the session. The euro-pound pair, which we looked at yesterday, continued its down move today after a retraction to the 0.8850 area overnight. From that intraday high, we fell about 80 pips, testing our low from May 7th, which gave the pair another bounce. That support level stalled a pound rally also in the middle of April, so it will be interesting to see what happens with this pair in the next several sessions. In news from the Eurozone, the German ZEW economic sentiment, which measures investor confidence, climbed 18.1 points to 31.1 for the May period. The optimism is based on modest signs of a recovery of the real economy over the last several weeks. In other words, fundamental indicators like industrial output have stalled their strong declines while exports began to rise again, which is giving investors the feeling that the worst of the recession in the Eurozone may be over. Though we saw that the euro slid against the pound, the euro-dollar pair extended its rally from yesterday. That fits into a theme of risk appetite that has started this week. The euro climbed to the 1.3650 level in the wake of the ZEW Economic Sentiment Index, which was a high from last Thursday that acted as resistance. The pair then counter-rallied downward, bounced off a trend line that had previously acted as resistance, and then retested the intraday high in the New York afternoon session. In the U.S., housing starts slid 13% to an annual rate of 458,000, a figure that was much lower than anticipated and a record low. The news deals a blow to those thinking that the construction sector may be recovering. The lower starts will lead to a reduction in supply of new homes on the market, which has been an Achilles heel for sellers as an oversupply of new homes has pressured prices. That leaves the prospect for a recovery in the second half in the sector, though it could pressure the economy in the short run. Building permits, meanwhile, fell to an annual pace of 490,000, also much lower than expectations. U.S. stock indexes were higher for most of today's session, but then fell into the red right before today's close. The midday gains in stocks, despite the weaker housing data, didn't show in the dollar-yen pair the way yesterday's rally in equities did. In fact, the Greenback slid prior to the New York Open and was unable to garner any kind of move upwards. That could indicate that the dollar's weakness in other pairs is seeping into this pair, and that the upside for the dollar here is limited, but further price action is needed to see if perhaps today's move was just a retraction from yesterday's rally. The US dollar-Canadian dollar pair continued its slide in favor of the loonie, testing the 1.1520 area in late trading, as oil prices rose another 1% today and risk sentiment favored risk appetite. Yesterday's break of a short-term support level could indicate a further down move for the pair, though there is strong support at the 1.1475 level, which could be tested tomorrow. The Aussie-US dollar pair broke above its recent resistance at the 0.77 level in today's trading, extending its gains from yesterday and reverting back to the uptrend we have seen to start May. Following last week's consolidation and retraction, if risk sentiment remains positive, investors seem poised for a second rally. Tonight, look for Japanese GDP data and consumer sentiment and wage prices data from Australia. Overnight, Germany releases its producer prices, Switzerland posted ZEW expectations index, and the UK reveals its meeting minutes and the measure of industrial orders. Tomorrow, Canada posts its consumer price index, and the US releases its FOMC meeting minutes. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.